Hey, welcome to the Closing Beat, everybody. Happy Wednesday. Yep, Wednesday. How you doing today? Hope everybody having a good day out there. We're financial advisors here at Jazz Wealth, and we do the show daily for you guys. Just give you an update on the stock market, let you know how things are going. If you're working with an advisor or a company that doesn't teach you, doesn't help you, doesn't work with you, hey, I hope you'll check us out at Jazz Wealth. Do appreciate that. We try to teach you stuff along the way. We're teaching advisors. We do a class every Thursday for our customers, teach them something new. And this Thursday, we're actually going to teach them how coming into our dojo is going to soon look much, much different there with a little show and tell. So we'll see you Thursday for that. Other than that, let's get started today. Talk about the stock market. You can see all green on your screen there. All the major indices were higher on the day. It was kind of like a flat day throughout the day, and then there was like this late day rally that spiked up there to kind of get us into a more solid profit or growth for the day, so to speak. We'll talk about it. Let's go over to the charts here and take a look. We've got the NASDAQ. There you go. NASDAQ sort of quiet today, basically a neutral range day overall. The big names pretty much pausing for earnings. We'll cover some of those as we go. Microsoft is one of them that we're going to be covering, as that one was sort of back and forth over the last few days, waiting for earnings as well. It's also in the Dow. It's the best stock of the year, by the way, in terms of performance, even with the after hours here. So that one was kind of pausing. You also got Tesla in the news as well with their earnings. We'll cover that. And then Apple, which is up to report next Tuesday, I believe. They're basically kind of quiet leading up to that as well. In the NASDAQ, one thing that stands out here is AMD. I know some of you guys had that. You were waiting for AMD to pop out. That finally broke out to new highs. Very big move on that one. They announced some new chips for PCs today. So big fans there, and the trend is sort of shifting, right? People, the gamers and stuff, they like their AMD chips there. I've seen some of your comments as well. So the NASDAQ, nonetheless, was pretty quiet just because the big names not doing a whole lot on the day. We take a look at the Dow. The Dow is creeping back to positive for the year. It is down just about 5.5% on the year, a little less than that. And some of the names that stick out in the Dow today, at one point, McDonald's was responsible for almost all of the Dow's gains on the day. Very strong move for them, up about 3% on the day. And then Pfizer, on the virus news there, Pfizer moving back to these prior highs here. That's where it stopped for the day. People waiting to see a little bit more before it maybe breaks out. We'll see what happens there. Up 5%, still a really good day for Pfizer. We look over at the S&P there. Tech and healthcare were your biggest gainers on the day. The S&P comfortably above 3230, which is where it moved above earlier this week on Monday. Over the weekend, we talked about that in our Notes from Jazz email to help customers and our members on our membership site as well. So S&P a little bit stronger here today. Healthcare, like I said, and tech were the biggest contributors in the healthcare space. Nope, it's going to be over here, Dustin. There you go. Pfizer was one of the bigger contributors in the mix. And then HCA, really good day, above the 200-day moving average, up 12%. That's going to be on earnings. Also AMD helping out in the tech space there, and Microsoft, at least during the day, helping out for the S&P. After hours, a little bit different story. Microsoft, by the way, beat on earnings, beat on revenue, sold off because of apparently LinkedIn was a rather harsh suggestion for them, but everything else looking really good for Microsoft. They did quite well. We're seeing that. We're seeing more stocks sell off into earnings there. The average move for Microsoft on earnings is 3.2%. It is currently down 2.5%. So inside the expected move for Microsoft overall. Earnings continues to be the major focus here. Today, you had about 65 names reporting. Tomorrow, you've got 80. And then going into Friday, you've got over 100 names reporting. And that's not even the busiest day of earnings season. That goes into next week, actually. If you're interested, you go to our membership site, jazzwealth.com/research. We actually broke through over 2,000 names, sifted them through, showed you how to actually sift through the different names to find the volatile stocks, stocks you may be interested in, stocks you may want to stay away from. So kind of a lesson, but also kind of some research to share with you there as well. Like I said, currently, and it's early, stocks are moving lower on their earnings day. That's not a good sign because tech has kind of taken us to this point. If the tech stocks continue to sell off on earnings, even if they're good, like Microsoft you saw today, that's going to probably put a little bit of a damper on the market's rally. We'll see what happens. Of course, anything could happen. Probably going to cover that this weekend in our Notes from Jazz email as well, just to give you a little bit of an update on that one as we go. Late in the day, we got a little bit of a boost from, we'll call it the Republicans, right? They came out and said, we're thinking about, they're starting to put together new ideas to work on the next stimulus plan after yesterday sort of saying this is going to take a while. The Republicans came out and said, we'd like to reduce the $600 a week unemployment insurance, the additional unemployment insurance, to $400 a month. So that was their first number to throw it out. It probably won't be that number. That's just the number that they were throwing out there for you guys. So we'll see what happens there. I think the market kind of looked at that as, well, it's great that they're at least talking. Right? They've got a dialogue going there, so maybe something can happen there. We'll see what happens. Our FinTips videos, bottom right-hand corner of your screen. Monday, we talked about target date funds and the ideas of some changes coming to those target date funds in your 401k. Today, we did Roth conversion considerations, something you may want to check out. And Friday, we're going to go through the order of funds for the, if you took an early withdrawal from your Roth IRA. We're going to go through that for you there as well. So hopefully something you'll check out. Wine and Wealth on Thursday tomorrow for our customers, going to do a bit of a show and tell. And in the research site, we've actually got some posts on the earnings like we talked about. It's earnings season. We're going to focus on that a little bit. I'm going to actually share some of the data with you today. We'll go through some types of things that we like to share in the research section. We'll give you a freebie today, so see if you like that. So stick around here for a little bit. Let's go over to the sector breakdown here today and see what we've got. There you go on the screen is all the major sectors color-coded by gains or losses. Today, the defensive interest rate sensitive areas were the higher ones today. I'll look at real estate. They needed this rally here. This real estate, I mentioned over the last 2 days, looking super weak. A lot of weak patterns in there. Not that it was a great day, just moved back towards the highs of the range, so they live to fight another day if you're looking inside of that area. Utilities got a little bit of a bump today, trying to go above the 200-day. Yesterday mentioned that it just can't seem to do it. Well, it's going to try again, and we'll see what happens there. Not a sector, but if you look at home builders, they're back to these highs as well. The XHB is what I'm showing here. This is not just home builders. This is everything in that category, so just careful with that. But moving back to those prior highs, strong day. Existing home sales came out better than expected. That helped that sector overall, which includes things like Sherwin-Williams and Home Depot and the like. Industrials trying again to get above the 200-day moving average today. It was a broad rally right across all industrials today. Very broad rally. Let's see. I don't need internet on this computer, but I no longer have internet. So we'll leave that for the moment. There we go, reconnecting. Anyways, a couple names I want to point out, as I always do, inside the sectors. You got Lockheed Martin up 5% on the day. They got a contract the other day. We talked about that. Packer, these guys continuing their earnings movement continues to be really strong, actually. Airlines were the only weak area inside the industrials today. That was mostly because of United Airlines. They reported earnings lost way more than expected. Cash burn for them, not really an issue at the moment. The CEO is basically saying, hey, until there's a virus, there's just not going to be any action. They're also seeing their schedule in terms of demand down 35% year over year. Their schedule is at 35%, demand down 83%, and the CEO said, look, until we see a vaccine, it's just, we don't know what to expect here. American Airlines down about 1% on that news as well. They also have earnings coming out tomorrow. You got a 50-50 chance whether it will be positive after reporting earnings, and that is the industrial sector. Looking over to energy, there you go. A little bit of a down day today after yesterday's really strong move on those oil numbers. If you look at oil, oil also pulled back a little bit. Not as bad as it was earlier in the day, but pulled back just a little bit. on the day, retracing some of yesterday's losses. If you look in the energy sector, it was just pullbacks a little bit. There was only, I believe it was WMB was the only stock that erased all of yesterday's gains. Every other stock in the sector, just a tiny little bit of a pullback, not too bad there. Some of the good names that stick out in the energy space going to be Excel Energy, breaking out of this little range here. Strong day, strong above average volume, not too bad there. DTE Energy actually getting back towards the 200-day, trying to move again, move above the 200-day. And CMS Energy breaking above, kind of confidently above the 200-day. So there wasn't all bad news in the energy space today if you're taking a look around. Let's get into a little bit of a lesson here. I'll go over to gold. You'll notice gold made new highs today. And that is, for one reason, it is because the dollar was actually lower and continues to be really weak. If we take a look, I'll use the ETF for that. New lows for the dollar. Not good. Now down over 5% in the last 3 months. The dollar continuing to get really, really weak here. Not a good sign, but it's a good sign for risk. So if you're thinking about taking risk, a weaker dollar is stronger for the market. One way you could take a look at that, I'll share with you here, is looking at the dollar on a chart and comparing it to volatility. As the dollar moves lower, volatility tends to move lower as well. So I'm plotting this on the chart below so you can see volatility moving lower with the dollar. Dollar moves higher, volatility moves higher, meaning people want to take less risk. It's kind of a fun way to take a look at it if that's something you're into there. If you want to further identify that, you can look at the markets. As the dollar moves lower, volatility moves lower, markets move higher, right? So it's a little bit of an econ lesson there. We won't go into all the boring stuff, but you've got the markets moving higher down here at the bottom, volatility creeping lower finally, and then the dollar, of course, hitting those new lows, something to take a look at. One thing I want to point out is this, the dollar moving lower has been great for gold, but been better for silver. Silver, 9% on the day. Really, really interesting. In fact, the gold and silver miners, one sector that a lot of people aren't taking a look at. Here's a little bit of a teaser for you if you want to look through ideas of what we share in the research section there. The U.S. mining companies have obviously performed really well. I'm going to share that with you. What we did is we sorted them by market cap, and they had to be traded here in the U.S. so that it wasn't something you guys couldn't participate in there. But if we take a look, we took the top names by market. No, that's not it. That's the earnings for tomorrow. Let me see what I got here for you. I'm going to try to pull it up over here because it was really cool, man. It was really cool. It's on my screen, actually. I went to the wrong thing. There it is. I'm with you now. Come on over. There you go. Here it is. So here's the mining stocks. We took market cap of $2 billion or more. You can see it sorted there. Just something to look at there. Also had to be U.S. traded so that you guys can participate. Impressive gains across the board. Look at the year-to-date returns. Look at the 1 month returns. Really strong. Gets no real attention. If you're looking online, or if you're looking CNBC, Bloomberg, whatever, these gold mining stocks, these silver mining stocks, general metal mining stocks doing real well. All but 3 of them are outpacing the S&P year to date. I just didn't color code them. They're down here with negative returns. The only ones that aren't outpacing overall. While tech gets all the headlines, what we thought would be fun is to compare the boring old gold mining stocks to the exciting and headline, like look at me, tech stocks there. Over 70% of them are beating the tech sector. There's a lot of action going on in the mining area right now, and a lot of these stocks aren't even overbought. They've just been trending higher very steadily. So what we did is we plotted the 1 month returns and we plotted year-to-date returns, and then just for fun, went over here to the right to show their performance versus tech. The average mining stock is outpacing tech by an average of 33%. That's not the average of all of these tied together, although it kind of looks like that. I could do better on that next time, but something I wanted to put that there for you. Over half of them are beating tech by double-digit gains. So if you're wondering, like, is this rally going to continue? Already beating tech by double digits, and tech has been the exciting area to be. Notice you don't see miners in the news or anything like that because they're not big names. They don't have big name CEO personalities, things like that. So here's a list. You may want to screenshot it, do something like that so you can take this with you, and maybe take a look at digging into some of these on pullbacks. There's a couple favorites I've pointed out along the way. Not my favorites, but just the market's treating them as favorites. And this is the kind of stuff I want to hone you into, because while everybody's focused on Tesla, Nikola, NVIDIA, things like that, there's other action going on. You just got to be able to sift through it, organize yourself, come up with a watch list and see what you're interested in. Develop your sort of story behind it, right? Dollar moving lower, gold moving higher. It's good for the gold miners. Let's go take a look at gold miners. And then going from there. There's only a couple of them. Well, obviously, the worst performer is only up 1.3%. Best up about 70% if you're looking through the names there. And that's just kind of a quick way to share some info with you if you happen to care about that. If not, I'm sure you'll let me know in the comment section. So we'll see what happens. All right, let's take a look at some of the stocks in the news here. 40. Technical breakdown, I should say. 40 stocks hit new 52-week highs today. All but 2 finished in the green. A couple you're going to recognize. AMD, we already talked about. Best Buy is going to be earnings related there. Both kind of breaking out. So if you like breakout patterns, that continues to be the focus pattern of technical traders out there. They're not interested in anything else at the moment, largely because there's not anything else to trade if you are a technical trader. A couple notables on the new 52-week high list are Dr. Horton from last week there, talking about the breakout there. That continues. Again, find a watch list, find a reason you're interested in it, look for a pattern you're interested in, follow that momentum. That's what I walked you through with Dr. Horton and the home builders there over the last couple days, so I wanted to point that out. One from our watch list here, which I think we're going to change this kind of layout here to have a watch list. So that way when we're reviewing stuff, you're not looking at other names. Cummins, there you go. So that was the breakout we talked about yesterday. It did break out today, very, very strong overall. Sherwin-Williams was another breakout play that we mentioned. Of course, it had already broken out, looking good there. Continues to look good. That's going to be tied into the home builders, which had those good existing home sales today. The theory there is, right, if there's more homes changing hands, even if they're at higher prices, they're changing hands. People are going to go buy paint. They're going to go to Home Depot. They're going to go to Whirlpool. Did you see that? Whirlpool just killed it on earnings there, buy new appliances and things like that. So big help there. Sherwin-Williams looking good. I'll cover a couple others in the new high list because there's a lot to look at. EQIX is one of the strongest REITs inside the REIT space. If you're seeing what I see over there in REITs, like there's some weakness brewing, but you've got strong names like this moving ahead. That's pretty cool there. Something to look at. LabCorp breaking a new highs as well, up 1.6% on the day. Kind of extended in the short term. Here's the problem, right? Unlike Dr. Horton or others, this one's extended over the last 4 or 5 days here. So to see a breakout happen now, it's attractive, but it's a little tough to buy that one, just in my opinion. O'Reilly Auto Parts also trying to break out here. Not quite there yet, not as strong as some of the other ones there. I think one of the reasons for me is that it's one of the most expensive. If you look at forward earnings there, fundamental kind of analysis, look at forward earnings, it's the most expensive overall. And it's outperforming. It's up a touch for the year, whereas Advanced Auto Parts and AutoZone, those are still down. But take a look at AutoZone. If you like this space and you're seeing what's going on with O'Reilly, this one's a little bit cheaper, not price-wise, but it's a little bit cheaper looking forward. They're expected to have better forward earnings than O'Reilly and maybe a more tighter consolidating type pattern where you've got something from like 1162 maybe up to about 1260. That's $100. And I don't know if it gets there, but something to take a look at there. No new 52-week lows, and a couple other stocks that we had on our watch list there. CTSH from their little recent breakout back above the 200 moving average. Amcor, not there yet. It's trying. It's a watch list. You know, if I could point this stuff out ahead of time, that's ideal. Cummins, right, breaking out today. That was on our watch list. We also have CarMax. I know I'm going through them quick, but there you go. CarMax comfortably breaking out today. Above average volume. You like to see that, so you know you're not the only one participating there. I think that looks pretty good. A couple others, and then we'll move on. In C, there you go. Trying to break above those highs. Watch list item. It's not quite there yet, but something you may look at there. ADS on the weak side, looking for a downward move there. They got earnings tomorrow. That makes it really tough. It's just kind of one, let's just see what happens. That's a tough one to trade. Avalon Bay, just a little recovery after breaking down as well. Still looking weak. It's just a recovery day. Gives everybody else a chance that didn't short it to play along. Twitter breaking above those highs. I mentioned that as well. This is a really tough one to participate in. They've got earnings tomorrow. It is the most volatile stock that will report earnings tomorrow. I don't know if that makes it attractive to start a new position. That would worry me a little bit. We'll see what earnings come out as. And then Newmont Mining, one of the good ones there in the gold mining space. They also have earnings on the 30th, but the second quarter is their best earnings. Covered that yesterday in greater detail. All right. Some of the stocks in the news. Here we go. You can see them on your screen below me. You've got Best Buy breaking out. We talked about that already. They came out with earnings. They are seeing store sales up 15% since reopening. They are up 2.5% for the quarter. So sales improving there makes sense, right? Stores are open. You can go in and buy stuff. Our store here, by the way, for a while, they didn't open, and it was like you had to order and then pull up in your car, and then they would throw it in your car and wipe down your car and all that. So it was kind of a weird operation. But they're back open, so obviously things going well for Best Buy. We'll hope that continues. Capital One, nice day today. 2% gain on the day. They missed on earnings, but they got an upgrade from Oppenheimer to $69. Not too far from there. They're not expecting a blow-off kind of year for them, but still got an upgrade. That stock was a little bit higher. Snapchat, well, we talked about it. Your most volatile stock there in terms of reporting earnings today, or yesterday. They beat by a penny. They lost money still. Guidance stayed the same there. Stock sold off about 6%, which is less than expected. But this stock awfully volatile for earnings. Now you know. You got a chance to follow it before, during, and after. Texas Instruments down 2% on the day. That did hold back the semis a little bit, but they didn't have too bad of a day. Still small gain on the day thanks to AMD. But other than that, Texas Instruments came out with earnings there as well. Also trading within the range, right? 4% plus or minus is where this thing trades for its quarter two earnings. Shared that data with you. And it's closed out. I mean, it fell as far as 4%, but it closed out about 2%. So still within the range. Not too bad. And United Airlines, we already covered, down 4% on the day. That's going to be earnings related as well. One more thing. Let you go have some fun with this one here. I shared this a minute ago. Here you go. Earnings on deck for tomorrow, sorted by volatility. I just mentioned a second ago. Twitter, most volatile stock to report earnings. What I did, tried to highlight this for you here to show, rank them by volatility. So this is expected to have the biggest move, and then if you go to the bottom of the list, this is expected to have the smallest move, right? Well, that's helpful, but doesn't really teach you a lot. So what you look at now is you take this list and you say, okay, if I'm going to take this volatility, if I'm taking the risk of a big move, then I want something that has a solid track record of beating on earnings, revenue, or both. So for example, Twitter, not the longest history in the world, has a good history of beating. 80% of the time they beat on earnings, 80% of the time on revenue. So if you're going to accept the volatility there, that there's a chance it falls pretty aggressively, you want to at least know you have the fundamental odds on your side. You could see something like Max Linear, maybe not something you mess with, right? Kind of a mixed bag here overall in exchange for a lot of volatility. Don't know if I'm going to do that. UFP Industries, things like this. If you look down in here, we color-coded them for you. If you're taking essentially a 50-50 shot for a lot of volatility, I don't know that's where you want to play. Skyworks does really well, so the volatility becomes justified. You're taking a justified risk, really, for participating there. And here's another one. Citrix, by the way. Beats nicely. A lot of data, 74 quarters. We're looking back there, so a lot of data to see that they have a strong history there in exchange for a lot of volatility. Now, on the downside, if you're looking at the least volatile names, right, same thing. Be kind of cool if you could put the odds in your favor and not expect a lot of volatility. So things like your Blackstone, right? That's a REIT. As you go down the list, you just kind of put these things together for you. I just wanted to share these ideas with you where if you're going to take that extra risk, make sure the odds are on your side. Don't mess with the ones that don't have a great track record and they're volatile. You're kind of just asking for it. Or maybe you're looking to the other side. Maybe you like that sort of downside move there. So yeah, that's it. Just wanted to share that with you. You may take a screenshot of that as well if that's something that interests you in terms of geeking out a little bit, which we like to do here. Let's get to the earnings. Wow, Tesla did report a profit. Now, to be fair, you know they were trying to do this, right? So they were trying to report a profit. They were expected to make a penny or 2 pennies or something. They made $2.18. I wonder how they got to that earnings. Do you think it has something to do with them selling their credits that they got? I bet you that comes up in the news if they want to really talk about it there. Nonetheless, they did get a profit. They needed to show a profit. This would be the final quarter that they needed to show a profit if they want to meet the minimum criteria for being included in the S&P 500. I don't know whether they'll be added or not. It's certainly not up to me. But they did make the profit. Doesn't mean they will get added to the S&P. It means that they met the criteria. The S&P now has to think about it, decide whether they want to include it or not, just for fun. If they do get included in the S&P, will the stock go up or down? Statistically, the stock will go down in the short term, outperform in the long term. So don't fall for the idea that you're going to buy this stock now and it's going to go into the S&P. You're going to see a lot of things on the news. In particular, there's going to be 2 numbers. Number one, if it gets included in the S&P 500, it will have a weighting of close to about 1%. It's like 0.8, 0.9%, somewhere in there. If you take a look at the money that's in the S&P 500, take about 1% of it, you've got about $30 billion of shares that would have to be bought in order for them to include it in the index ETFs, index funds, things like that. Is that a lot of money? So that's the question, right? At $30 billion, can that move the stock? Well, if you take a look at today, Tesla traded just about $12 billion all in one day. In other words, these funds can make the addition to the S&P if they have to without moving the stock, right? So careful there. 30 billion sounds like a lot. It's not a lot when you talk about how much Tesla trades on a daily basis there. And historically, stocks do fall. You can look at any number of different names going all the way back to old Warren Buffett, right? He did Berkshire Hathaway there. Stock underperformed in the short term. Obviously, we know where it stands today. So don't think you're somehow going to trick the system. And the S&P says, yeah, we're going to include it, next quarter. And then you think somehow you're going to beat the system. Statistically, the odds are against you there, just so you know. I mean, I hope it's different this time for you guys, but that's where that'll be. Okay, earnings tomorrow. Showed you the list, but you've got American Airlines, Cintas, Danaher, Dow, Hershey, which was on the list there as well, Kimberly-Clark, Southwest Airlines, Pulte Homes, that'll be an interesting one, AT&T, Tractor Supply, remember that's your beast. That's that stock that's just been on fire. I'll show that for you real quick. Take a look at that. Straight up momentum trend there. You got Twitter, most volatile name of the day. And I believe you're going to have Intel as well. Normally kind of a quiet stock there until earnings come out. As far as dividends go, you got Procter & Gamble paying out 79 cents there. And you got Williams-Sonoma almost hitting new highs. Maybe a breakout play there. 48 cents reporting as well. Yeah, and that's basically what I have for you. I hope that was helpful. I hope you learned something today. We crammed a lot into that class. I will try to answer some of your questions as everything has fired back up here flawlessly. I love it. And let's see, you got 100% gain on Tesla. There you go. 100% gain. Tesla is now up 5.5% after hours. No, it's still up 5.5%. And I believe the conference call starts here shortly, so we'll get out of your way for that. But they picked the site for the next Gigafactory. It's going to be here in the States, but they picked the next site. They just didn't say where it was. So maybe the conference call, they say that. If they do say that, maybe the stock's more active after hours there. So we'll see what happens there. Yeah. Is the S&P still a diversified investment? If I was only going to invest in a single ETF, should it be the NASDAQ Dow or Uncle Russ? Yeah, definitely a consideration there. Those are not the only four, by the way. We did a class on this a while back, went through every index and said, which one is historically the best? If all you could do is just pick one of them, which one's the best, which one's the worst, which one has standout years and all the dividends and things like that. And so it blows my mind that people just randomly and almost zombie-like pick the S&P as if because a book told them to. Do some research. Take a look. See long term. Which area do you want to be? And I'll give you a hint. The answer is not the NASDAQ. Yep. I love it. You've got the Dow. You want to keep the Dow. Well, it's working on it. Right? It's underperforming still, so you're not obviously too happy there. But hopefully it picks up steam for you there. Yep. I saw Nikola today. Yeah, Nikola a little bit lower. I think people coming towards reality on what that stock, company is probably worth there. So that's a little bit of a tough one. Yeah. If you like AMD on that breakout today, this is a tough one. It really is, because if it just broke out a little bit and the volume was as high as it was, you grab attention. It sets off the scanners. You've got people looking up watch lists. You'd think that grabs some attention tomorrow. I would think if it opens tomorrow and starts trading lower, that would be a buy. I would think traders would respond to that as buying the dip. The trouble is, what if it goes higher? Now you're stuck. Now you're kind of forced to chase it. I don't like that position. I'm one to say I'd rather just miss it than chase something and buy it where I don't want to buy it. It's like buying anything else in life, right? There's a car or house or something, and the price gets bid up. At some point you say, that sucks, but I'm going to miss that one. Yeah. I love it. Oh, yeah. You think Microsoft will roar back tomorrow? Currently down 2 3/4% after hours there. That's the average move, right? Unfortunately, these stocks, it makes me worry about next week with some of the bigger names. Average move is the downside move on earnings, and that could just be people taking profits. There was nothing really wrong with Microsoft's earnings there. The company's not suddenly broken by any means. It was just selling into the news, which you don't want to see in names like Apple and the other ones as they start to report. But we'll see what happens. What do you think about EXPI? It's obviously performing really well. If you own it, you're excited, and if I owned it, I'd be excited to take some profits. I mean, where's the target, right? You got to look at that and say, okay, 3 days stock moves 20%. How often does it move 20% in 3 days? Once? Twice? And maybe 3 times, but to the downside there, right? So what are you doing? The stock is telling you we're doing something that's abnormal. If you own it, this is not normal. If you don't own it and you're thinking about buying it, you're buying into something that's not normal. So heads up. Oh yeah. Yeah, a lot of stocks, unfortunately, are dropping after earnings. That could change, but we'll see what happens there. AT&T, the ticker symbol is T. I'm not sure what the question is there. It helps if you can be more specific on the question. AT&T is quiet, sleepy, not doing anything there at the moment. Yep. All right, I'll wrap it up there. I do appreciate you guys watching for the day. Everything going smoothly. That's always good. Have a great rest of your day and get some rest, right? Got a lot of earnings coming up. We'll be sure to cover them all. If you're a member of our research site, go on over there. You can see the whole list for you. We'll be expanding on that, of course, as we go with all kinds of good geeky stuff. Enjoy the rest of your day, and we'll talk to you soon.